Hi, welcome to this new video on buying an underlying asset using a knockout option derivative. So, today we will cover how to buy an underlying asset, for example, a stock, using a knockout option. Just before getting into the detail, just a disclaimer that this is not a financial advice but an educational video. Please do your due diligence before the trading. Um, let's first start with the definition of option. Yeah, so option is a financial instrument that gives the buyer of this option to the right, but not the obligation. That meaning you don't need to exercise this right, but it's up to you. Yeah, this you get this right to buy or sell an underlying asset. So every option will have an underlying asset. So that means the price of the option will be dependent on some, let's say, a share. Yeah, it can be also an ETF, it can be some other asset. um so here let's say in the case of the underlying asset is Apple shares. So there is always an underlying asset for an option, and then at an agreed upon price, and this is called the strike price. So when you try to buy a knockout option, you will see that what is the strike price. Strike price is the price at which someone who is ready to buy or sell sell the underlying asset to you. This is the agreed upon price. So you should always look at what is the strike price of this option if you have the intention to buy the underlying asset. Yeah, and then there is another point you need to keep in mind is the date. So for American options, you can only be exercised. So your right can be exercised only any day before the expiry date. So there is a date, it will be mentioned in your option contract. And so yeah, for American options can be exercised any day before the expiry date. That is very convenient because when it is a suitable time, you can exercise your right and get the underlying asset or the payment for this underlying asset. But the European options can be exercised only at the expiry date. So there is this expiry date, and only on this date you can exercise this option. So you need to look at what type of option is it. Usually, if you look at the underlying currency, you get an indication of what option is. Is it American option or is it a European option? So let's take a real example. Yeah. So in the left side, you have Apple stocks. So Apple stocks going down. You have the feeling that Apple stocks will go down, and now you bought a short option for Apple. So meaning you predicted that the price will go down. So your short option will be going up. The value of this option will be going up. You also have the strike price. So strike price is 139, let's say 139.74, and the knockout level is 145. So if you do not know what knockout level is, please consider viewing my other video on knockout levels of knockout options. That's irrelevant for this topic, but keep in mind that what is the strike price. So your strike price is that 139.74. So now you decide to exercise your right. So at certain point you see, okay, I want to exercise my right to purchase. So now you have a short option. So now you have the right to sell this underlying asset to someone. Meaning the Apple stocks, if you buy now from the market, it will cost you around 125 euros. Now there is someone who is ready to purchase this Apple stock at a price of 139. That is the strike price. So that what will actually happen is you at the moment you only have an option. Yeah, so you have an option for Apple. So what you will usually do is you will go to a broker, purchase buy one Apple stock and sell at a price of what you will purchase it for 125 and sell it at 139. This is how you will make the money there. So however, please consider the following. In most cases, it is more profitable to trade the option than buying the underlying asset. So this is something you need to do the calculation whether if you sell that option, uh, will you whether you will make more money, or is it more profitable to get the underlying asset. There will also be an additional cost, yeah, for exercising the option. So you need to also take into consideration there are different costs that comes into when you exercise the option. So you are not selling the option, you are exercising this option. So meaning you are selling this underlying asset. In this case, we had a short option for Apple. That means you have the right to sell this option. um, and another thing is you need multiple of this option to buy the underlying asset. What does it mean? So here we have one option. So currently the one option price is 3 euro 52. Different brokers have different the levels. So it is called ratio levels. I will come to this soon. Depending on this ratio level, you need multiple options to purchase one asset, one underlying asset. So in the case of Apple, so it is not like if you have one option you can get one Apple share. So this is where I said two important terminologies that come into play. One is the ratio. So this is a very important component of this contract if you intend to purchase the underlying asset or to get the money for that. Ratio is the number of options you need to buy to get the right to buy or sell one underlying asset. What does this mean? Let's say there's the ratio of this contract given in the contract is 0.1. This means you need 10 options to buy one or sell one underlying asset. So in the situation that I just mentioned here, you need 10 options to buy the in order to exercise this right to purchase one Apple stock. As you see, if you sum up all the numbers, you see that it's not very profitable if you exercise this right, because you won't be making much money there. But yeah, then you will also need to take into consideration another aspect, the second aspect, which is the settlement. Some brokers do not allow you to purchase or to sell the underlying asset. Instead, what they will do is they will pay the difference in the price between strike and asset prices. So this is where you need to also consider this aspect. So if you are getting a stock of Apple, this is if you think that the stock prices will go up later, and so on, then it might be a good idea to how get the stocks. I read somewhere that Warren Buffett had once exercised his right to get the stocks of Bank of America, and he got the stocks of Bank of America very cheap. um, but some brokers do not allow this, so they will do the settlement via the difference in the price between the strike price and the asset price, which is not always profitable. So you need to take this aspect also into mind while exercising this right. So just to give a real example, so let's say you the price of the Apple stock is 100 euros. um, yeah, the strike price, um, the put option you bought, there's a put option, knockout option, and the strike price is 180 euro. So you see that the price of the stock is less than the strike price. This is good. It's a put option. You bought 10 options, yeah, and price of one option is 2 euros. Today, let's say today is 7th of January 2023 and the expiry date of 15th of January 2023. So you you want to exercise today, which is before the expiry date. So this is an American option. You can exercise it today, and it is given that the settlement is via payment. So you will not be able to get the stock underlying asset, let's say Apple stock, but you will get the difference in the amount. And the ratio is 0.1, meaning you need 10 stocks to buy one underlying asset. So you have the 10 stocks, you are within the expiry date, it seems profitable, and you decided to exercise the right. So let's see how much money you can make here. So the difference in price between the stock price and the strike price is 80 euro. And then there is a fees of 10 euros for exercising this right. So and then you have also paid money for the option. So remember, when you exercise this option, you will not get back the money that you paid for the option. So you paid 2 euros, you bought 10 of them, so you paid 20 euros for this buying this option. So this is also gone. So your net profit would be 80 euros minus 10 euro, that is your fees, and this 20 euro that you paid as premium or the option price. So in net you will get a profit of 50 euros. This is why I said consider all the different aspects while exercising this right, because it depends on situation with to see whether selling this option contract is more profitable, or whether buying the underlying asset is more profitable. So this is something that you need to check. You need to do the calculation to see what is the best option for you at that specific time. So if you learn something new on buying the underlying asset of a knockout option, consider subscribing to this channel, and also look for other videos. So I will be creating a new video on option trading strategy, how to buy the option, what is a good strategy for buying and selling option to make good profits. So consider viewing that and to learn more. That's all for today, and see you in the next video. Thanks a lot.